Sorry guys, just to continue from that question. Okay, so we're going to go back to note 3. Okay, and now we come to step 6, is one of the most important steps. We have to calculate depreciation on the remaining assets. So now we're going to calculate on the old unsold assets, and we'll also calculate depreciation on the new assets. Now for vehicles, we don't have any new vehicles, so we're not going to worry about depreciation for the new. We will only calculate for the old and unsold vehicles. So if you look at your balances, the vehicles amount is 390,000, but included in the 390,000 is a 90,000 cost price of the vehicle that we sold. So we're going to subtract that before multiplying our answer by 20%. Okay, so that calculation is basically 300,000 times 20%. Okay, so 60,000 is our depreciation. Go to your ledger. The journal entry is debit depreciation and credit accumulated depreciation. Okay, so on February the 28th, we're going to debit depreciation with 60,000. Okay, and we're going to credit accumulated depreciation on vehicles. Okay, with 60,000. This is the depreciation on the unsold. Right? Okay, now to go back to the note 3, we need to finish it off. Look at the depreciation here for vehicles. It will be this answer here, 15,000 from step 1 plus 60,000 from step 6. So for vehicles, our total depreciation is 15,000 plus 60,000. Okay, so that is 75,000. Okay, we're going to put it in here for depreciation, 75,000 in brackets. Okay, to finish off note 3 now, okay, let's start. Okay, before we do that, let's go to the ledger accounts. Okay, now ledger accounts for vehicles, it's done. You can balance it by yourself. For accumulated depreciation in vehicles, it's also done, and you can just balance it by yourself. The reason I'm not going to balance it is because we are going to be calculating the same figures in note 3. Okay, so let's go. Vehicles. The cost price at the beginning of the year is 390,000. The accumulated depreciation is 108,000 given to you. We'll then calculate the carrying value. There were no additions, so we'll now work out our movements, which is just minus 39,000 minus 75,000, which is in brackets 114,000. Okay, to get our carrying value at the end of the year, we're going to do the same thing we did for equipment. So 282,000 minus 114,000 will give us 168,000 at the end of the year. For the cost price, we'll start with the cost price at the beginning of the year. 390,000. If we had any additions, we would have added it on, and we will subtract the cost price of the disposal, which we put on the side. Right? Remember, you must always subtract what you have on the side, right? And that will give us an answer of 300,000. For the accumulated depreciation, we're going to start with accumulated depreciation at the beginning of the year. To that, we'll add on our depreciation and subtract the accumulated depreciation on the side. Okay, remember, when you're doing this calculation, you don't have to worry about the signs. So you'll say 108,000 plus 75,000 minus 51,000. But when you put your answer in, it must be in brackets. And this is how you get the answer. You can check 300,000 minus 132,000 is 168,000. So that would be the answer. Okay, then all of the totals will all just be side totaling. Often in exams, you don't have to worry too much about that. But we do worry about the depreciation total, because the depreciation total must be the same as the income statement. In this case, the same as the depreciation ledger account. And we will worry about the carrying value at the end of the year, okay, because this will go to the balance sheet. Okay, so that's all there is for note 3. I'll just go back to the ledger to see if I finished everything off here. Okay, so depreciation, we have finished it off. Remember, depreciation is a nominal account, so it will get closed off to the profit and loss account. Okay, so if you're doing a depreciation ledger account in any question, you must remember to always close it off to profit and loss. Okay, that's all for this question. Remember, it's over 2 videos. Bye.